Hey everyone, Tom Gentile. Welcome to the Profit Strategies Podcast. It is Friday, April 12th, 2024. Man, I got to tell you, we are going through some stormy weather right now. In fact, as I'm sitting here doing this podcast early, we've got severe storms coming through where I live here in Florida. They're saying 70-mile-an-hour wind gusts. So if I happen to get cut off and you hear a bunch of shh, you know what it is. You know what's going on. What a week. What a week that's been going on. I want to talk about news, not the kind of news that you're used to hearing about, but I'm going to talk about some of this news. Um, you know, I got a PSA I need to do too, and I'm going to do that here in a moment. But I got to tell you guys, what have I spent this week doing? Well, I was prepping for all this wind coming in because it didn't just creep up on me. We saw it coming. Kind of feel like I saw the inflation number coming this week too, but we'll get to that. What else? You know what I was doing? You know what I spent most of my time doing this week? I just finished up a 1-week crypto boot camp with many of my students. And what is a crypto boot camp? I do this once a year. And we go through, we did it every day, Monday through Friday. What did I do in this thing? We did basics. I did basics of crypto for folks that that have heard about it, probably been hearing about it from me for 10 years, and stayed out of crypto because they were scared of it, or because they heard that you could lose everything, or you could lose your keys, or you could lose this, or you could lose that. And honestly, people tend to be nervous about things they know nothing about. So part of my job was to educate folks on the basics, including exchanges, even some stock exchanges, some exchanges that you and I know very well that trade cryptocurrency. We talked about seasonality in crypto. I did details on Bitcoin. I did some details on Ethereum. And we also got into rules-based trading strategies. So you'll hear me say this a lot. I say it on podcasts. I do it on videos. I do it on webinars. I talk about it on articles. Everything else I do is that I like to trade with some sort of reason. There has to be a reason to take a trade on something, not just because everybody else likes it. In fact, I did last week the opposite of what everybody else liked, and I'm going to talk about what that is in a moment too. But I'm talking about, with cryptocurrency. So there's thousands of coins out there, and I only trade like the top 1 to 200. Usually the top 100 is where I sit. I put my flag in the sand, but I'm only going to trade them if I'm looking at things like Fibonacci ratios, and I'm looking for certain pullback levels. I'm also looking at something I call currency wave strategy, which involves moving averages. And I also look at channels. And we were looking at that. And then for those people that said, well, is there something else I could trade that benefits from the rise of cryptocurrency? I said, yeah, how about crypto stocks? And we were talking about stocks that had a very high correlation, all right, high correlation rates with crypto stocks, which is really interesting because do you know, I'm going to throw a couple names at you. You're going to say, oh, yeah, I knew that. Bido, when you look at Bido and you look at IBIT and you look at ETFs that trade with Bitcoin, yeah, they're going to be high. They're going to be highly correlated with Bitcoin because they trade with Bitcoin. Some use the actual physical commodity itself. Some are on the futures contract, but they trade very high. Some of you might realize that Coinbase trades very high to Bitcoin. Some of you realize that MicroStrategy, that's Michael Saylor's company, has a 95% correlation rate to Bitcoin right now. Did you know that JP Morgan trades high, has a high correlation to Bitcoin? Did you know that Interactive Broker has a high correlation rate to Bitcoin? Did you know that Robinhood has a high correlation rate to Bitcoin. These are exchanges, and they're trading up and down with Bitcoin. So we talked about that in much more detail. We took those top stocks, those top crypto stocks, and we ranked them, and we looked at that. And we did each day, we did reviews of the following day. We looked at trades. And so we also talked about a 90% strategy that I use and apply toward crypto stocks. We talked about software. We talked about apps, crypto trading apps that are out there. And so why am I telling you all this on a podcast? Because I'm going to make this available on demand. And when I do, I'll make sure all of you are aware about it. I'll let you know when that's ready to go. All right, let's move on down the road here. There was an article that came out yesterday. Says, what it is it's an article based on an article. You know how someone comes out and gives some headlines, and then all these other plagiarizers come out and write about the same thing, but kind of chop things up a little bit. So there was a news story that came out early in the week that the magic number for retirement is $1.46 million. It's almost $1.5 million. Is the average, that's the magic number people need in order to retire. Okay. Then I see, now I looked at that and I just swiped it away. But again, I see another one that pops up today. This is from Banking Rates. Some woman that wrote about banking rates, and it says most Americans are 1.37 million behind on retirement savings goals, survey finds. And I'm not going to read this whole thing to you. It says that the average American has $88,400 currently saved for retirement. That means they're a whopping 1.3 million short of their goal. I'm going to tell you this. Some of us are behind on retirement. Some of us are well ahead on retirement. But I'm going to tell you my thought on this. I don't think any of us, me, you, your family's pet, needs to retire. Nobody needs to retire. We're in a really weird situation where the dollar, we don't know what the dollar is going to be worth going forward. We don't need to retire. It is my goal that I'm going to be making some form of income, mostly going to be coming off my trading accounts, for the rest of my life. I'm not going to sit with 1.46 million in cash and then ring the bell and say I'm done and just sit on a rocking chair till death do I part. This is my PSA. You and I, for several reasons. You do something because you love to do it. That's what I do here. I love trading, and I love talking about it. I love to trade. I love to teach. I love to talk. And it looks like I'm going to be doing most of those until I'm put 6 feet under or in a little can. I don't know. But what I do know is that I don't plan on retiring. I plan on doing this because I love doing it. I plan on doing this because what else am I going to do? Yeah, I like to take time off here and there. Hell, it's been a few weeks since I've done a podcast, but I've been busy. So, I look at that magic number for retirement, and, I think I saw Kevin O'Leary, one of the sharks on Shark Tank, as most of you know him, said Americans need at least $5 million to retire. Here's a problem with 1.46 million. That's about 1.46 million away from a bad accident that you might have. It could be a health scare. It could be who knows what. And that could instantly be, up in smoke, which is why I and everybody I know are going to be looking for multiple streams of income for the rest of our lives. All right. My PSA is over. All right. What else is going on? Okay. So you know what? Trade the news. Someone said, hey, with all the news out right now, it's moving the markets around. Can't I just trade the news and make money trading the news? I kind of covered this before, but I thought I would do it with all of you right now on our podcast. So, I'm going to go where all of us get our news sources, and that's Apple News, unless you're an Android user. So I'm going to click on right now, as I'm talking, I'm just going to the news source on Apple News. Let's see what's going on here. Top news. O.J. Simpson has died from cancer at 76. All right. How do I trade that? I can't. Let's move on. How Florida and Arizona Supreme Court rulings change the abortion. Okay, can't really make money on that one. I'm looking for areas that I can trade on. And the problem is the Biden administration is trying to expand background checks. Can't do anything there. Hamas may not have enough living hostages. Can't do anything there. Wisconsin Supreme Court, pass. She started resistance training at age 65, pass. The European cities where wealthy Americans are buying visas, pass. Why Tiger Woods thinks he could win one more green jacket, pass. I could just keep going on and on and on. Okay, so seriously though, folks, trading the news to me is a recipe for disaster. All right, let's take this week's inflation report. Let's actually do something that's for real. Take this week's inflation report, okay? If you noticed, inflation creeped up a little higher than most people expected. Now, if you've been listening to me, and I'm not trying to pat myself on the back here, but the team and I were kind of thinking, this feels a lot like the 70s, where inflation went up, and then we tried to push it, and it ticked sideways, and it started going up again. And, after this week's inflation report, you could easily see, based on the bond market, that the rate cuts are pretty much off the table for June and July. So now rate cuts may not come until September, if anything at all. And there's this outside chance that if we get strong employment numbers next month, that not only rate cuts could come off the table, but we might even see a rate hike, which would scare the markets. I think would finally scare the markets into some sort of submission. So let's take this week's inflation report. So it came out, and all the news sources, and I'm not just talking about financial news, but even the three letters, the NBCs, the ABCs, the CBSs were talking about it and what it means for you and your money. All right. And they were really talking to folks that own stocks. So let's take a look at the week. All right. And I'm looking at the week, and I'm not including Friday because this is early, but I'm looking at the week. And, well, let's just pop on over. And, the portion of this part of the podcast is being brought to you by Robinhood. Not because I'm tiling Robinhood. It's because I got them opened right now on my phone. And I'm just going to pop in a couple of symbols and tell you where things have gone. S&P 500 was supposed to go down. A lot of folks were saying, oh, we're going down below 500. Well, what ended up happening? We had that inflation report come out, and we dropped down to, 512? And then the rally came. So apparently, the folks in the stock market did not get the message that inflation's coming. Okay? Because they're trading it the other way. They're buying it back. Yeah, we're still down 0.5 percentage point on the week, but we're off the lows, well off the lows. All right. Okay. So the stock market, these guys didn't get it right. Right. So what about commodities? How about oil? So, for oil, I like to look at USO. You guys all know that. And oil for the week has been trending pretty much sideways. Oil is not, the folks that are trading oil are not worried about what one day of an inflation report is they're thinking about. They're thinking about the Middle East right now. They're thinking about Iran actually getting involved in the war with Israel. And Iran is linked to Russia. Russia's linked to China. And this is a concern that, that I think oil is going to be that early warning indicator if something goes global. That's what oil traders are looking at right now. And we're consolidating, USO is consolidating somewhere in between, I want to call it about 81 to 83 on oil. So it's a tight consolidation right now. All right. But it's up on the week. Not by much, but it's up on the week. What about gold? You know, gold usually goes down when the interest rates go up, right? Okay, let's take a look at GLD. How did it perform for the week? Oh, gold is up better than 2.25% since the beginning of the week. In fact, it barely got phased when the inflation report came out. In fact, GLD is trading at 218 as I speak. 218. I mean, wasn't it just yesterday when I was saying that we were knocking on the door of 200, and at 200, which was support, was going to become, or no, sorry, 200, which was resistance, was going to become a support number? All right, so stocks are not following an inflation report. Commodities are not following inflation report. Oh, well, what about cryptocurrency? Cryptocurrency's got to be doing something that's in that area. All right, well, what about Bitcoin? All right, so, and again, I can look at cryptocurrencies and I can see what's going on with the crypto list. BTC. So, BTC for the week, guess what? Up almost 3.5%. Yeah, you know what? It did drop. It did drop from, it did have a high, and this was back April 8th at around 72,000 and change. It did drop back down into the 67s, the high 67s, but back up above 70 again. And that was just the last couple of days. It started the week out at 67,000, up almost 3.5%. So I am telling you this, trading the news really is a recipe for disaster, because news, when it comes out of a newscaster's mouth and it goes into your ear and it wiggles, you know, that sound vibration comes in your ear and wiggles and turns into words, that can become very emotional for most people. And emotions and trading are not the right thing to do. In fact, just earlier on my boot camp, when I was talking to my folks on the boot camp, we were talking about emotions in trading. And we were talking about the emotions of trading, the 4 phases of trading. They are greed, followed by fear, followed by hope, followed by despair. Now, I'm going to give you 2 examples that you can hear me on. You don't even need charts for this. If you do, you can find them. All right. But think about last year. I'm going to give you a chart from last year. I'm going to give you a chart from last week, from this week, actually. Bed Bath & Beyond. I like to call it Bed Bath & Behind. Last year, Bed Bath & Behind, almost this time last year, was trading around $5 a share. As we got into summer, I think there was an idea that that it was going to get an infusion of capital, and all the meme traders came in. This thing shot from $5, took a couple weeks, but went to 30, and then just 3 days later was back down below 10. So right there, you had the greed and fear emotions happen really within a couple weeks. During the month of August, we saw this was 2022. We saw that greed become fear, become hope, as it struggled to get back from 10 to about 14, became despair for the rest of the year as it traded down below $4, $3, and we know where Bed Bath & Behind is now. All right, you might say, Tom, you know, that was 2022, 2023. Tell me something that's gone on this week. Tell me something that's gone on this year. All right, I'll tell you something that's gone on this year. All right. Now, before I tell you this little story, let me remind everybody that this is not political. All right. That the person I'm talking about in question, I'm talking about this as an opportunity for some and a mistake for others. Okay. I'm talking about Digital World Acquisition Corp. So if you go back, and I want you to think about this. Let's go back to New Year's Day. We all had resolutions. 2 things were going on during the month of January. We're all trying to hang on to our resolutions. If you remember, mine was don't eat sugar. Well, that lasted until about the end of March, and I've been sugaring it up since then. Now that I'm past birthdays, Easter, all kinds of stuff going on, I'm now ready to go back on the sugar-free plan because it really, I felt much better about it. Okay, I'm done with that. Enough of that. Let's talk about what else was going on in January. You remember the Iowa caucuses? Remember a person by the name of Donald J. Trump who did not show up at any debate. Smart on his part. He kept the crowd with him. The debates were watched by not that many people. It was kind of like who's competing for second place. And all that happened at the debates, and you got to think this guy is like a mental genius sometimes because he's sitting there probably laughing about the fact that these guys were just tarring and feathering each other. They tried to talk about him, but he wasn't there to defend himself or put them down. So they started talking about him. They ended up talking about each other. And what happened at the Iowa caucus? He got a huge win. DWAC went from going into the caucus, DWAC was below $20 a share. On the day of the caucus, DWAC was around $25 a share. The day after the caucus, we were close to 50. And then we wiggled back and forth between about $30 to $50 a share. And now I'm going to take us into March. Because in March, as Donald J. Trump was dealing with court cases and hundreds of millions of dollars of decisions against him that he had to get, having to go out and get a bond. DWAC decided to vote on the merger to become Donald J. Trump Media. Now, when that happened that day, DWAC was trading below 40 and it settled just below 50. That's the day it got approved. I went in and looked at this. Now, here's the opportunity for some and the mistake for many. The mistake for many were it's breaking out, and there was a lot of meme traders jumping in. I'm buying this. It's going to go to the moon, to the moon, to the moon, to the moon. I wanted to short the stock. I could not short the stock because it was hard to borrow. I couldn't get it. So I did the next best thing. I sold call spreads. I sold call spreads on Donald J. Trump DJT. I actually sold them on DWAC, and they became DJT. And I gotta tell you what I did. I did the 45.50 call spread, and I got $2 for it. The next day, I saw DJT climb to $79 a share. I mean, my spread was almost 30 points in the money against me. And I was thinking to myself, I'm sure glad I did a spread, because if I'd have shorted the calls and it was 30 points against me, I might have gotten emotionally attached to the amount of losses I could have had. Anyway, I did a call spread. It was a 5-point call spread. I took 2 points in. For those of you aware of call spreads, the most you can lose is the distance between the spread minus what you put in. The worst I was on the hook for was $3 per spread. So here we are. That $79 later that day closed below 60. I thought, that's good. But then it opened at 70 again. And then it closed at 65. I'm like, all right, it's not above 79. Then it opened 70 again. It closed closer to 60. Then it started to move down as the meme traders ran out of money to buy this with. And we went from 60, and this was back at the beginning of April, to now closer to 30, as we're only a couple of days in. We're 2 weeks in. And in 2 weeks, this stock has dropped in half. And so where is my 45.50 call spread when the stock is close to 30? It is very out of the money. I got another week to go. So you can follow along with me and see how this story ends. But it's looking pretty good for me, and it's not looking so good for anyone that went long this stock just after it changed stock symbols. Folks, what is the story? What am I telling you here? I am telling you rules-based trading works. Okay? A, find a reason. other than the fact that your brother, your sister, your aunt, your uncle, your cousin, maybe somebody your cousin's dating, tells you they like the stock. Don't do it. In fact, you're better off doing the opposite if you're not going to trade with a rules-based strategy. By the way, I have rules-based strategies that have a 90% or better statistical probability of working. Not only historical probability, but statistical probabilities. So I don't trade the four emotions. I don't trade the greed, the fear, the hope, despair. I trade RBT, rules-based trading. All right. Hey, finally, as I am closing out this podcast, something else that happened to me, and I've been having to deal with this. A lot of you guys might have too. Any of you out there that are Think or Swim, or Schwabies. So Charles Schwab happens to be one of your brokerage firms. And I use the Street Smart Central platform. In fact, I've used it for years because it used to be Options Express. Yeah, I'm an old school guy, Options Express. And what happened since then? Well, Schwab bought Options Express, so Options Express became Street Smart Central. So if you, all those Options Express trades, the way I used to do them, I do them through Charles Schwab Street Smart Central. So I've been getting calls and emails for a while that I've got to change over to Think or Swim, that they are going to close up Street Smart Central. So I finally did my call because I pushed it off for a month. I finally did my call with the folks over at Think or Swim. Now, I use Think or Swim. I've used it, but I shelved it like, I don't know, 8 years ago. So I really kind of forgot about it for the most part. And so I took my Think or Swim account, and I had, and I'd actually had coding, and I had all kinds of neat little indicators that I created on it. Some of them I had people help me with. And the problem was that I just thought, oh, okay, I'll open up with Charles Schwab. And so I took a small amount of money and I created another account, and then I put Think or Swim attached to it, and all my indicators didn't move over. And so I'm like, wow, what happened? They disappeared. So when I took my first tutorial with a live person at the trade desk at Think or Swim, I told them I lost all my indicators. And they said, no, you didn't, because we can help you get them back. So this person walked me through going back to the old account, grabbing those old indicators, creating links to those old indicators, then closing out the old account, opening up the new account, and importing my old indicators onto my new account. So kudos to the folks over at Think or Swim, because you saved a lot of my old work, and now I'm going to be able to trade my Schwab account on Think or Swim, and I look forward to doing that. For those of you that are Schwabies, that are active traders, you're going to have to move over sometime. I suggest you get an appointment with one of those Think or Swim team members, because they're going to walk you through a lot of cool stuff. In fact, I've actually went ahead and made an appointment for another one, because I want to talk about some orders I like to do, conditional orders, OCOs, OTTs. So I do a lot of those type of orders, stop orders, not just limited market orders. I do a lot of crazy orders, and I do a lot of multi-leg trades. And I need to remember how to do some of these, and I need to know how to do some of them for the first time in a new platform. I don't like to change platforms. I'm that guy. I'm that guy that once I have something that works, once I feel comfortable with something, I stick with it. And so I'm being forced to move over, but I'm amazed once again at what this platform offers. And I'm not endorsing it. I'm just simply saying to those of you that have Schwab, you're going to have to make a change if you're using that Street Smart Central platform. All right. So there you go. There's my podcast for Friday, April 12th. We're going into earnings season. I'll talk about that next week after that. I'm going to talk about that for a couple weeks. We'll talk about how to trade into earnings, and we'll talk about how to trade outside of earnings. I'll probably be doing a couple videos on it as well so that you can actually see me as well as hear me. So until then, have a great weekend. I'm hoping this storm is out of here by the weekend, and looking forward to sunny skies and a nice weekend to relax. And I'll be back at it again on Monday. And I'll see you then. Have a great one. Bye, everyone.